Okay, ji, assalamualaikum everyone. How are you? This is Ali Mohammed Sheikh. I'll be starting a new topic today, that is bank reconciliation. So let's begin with the chapter. It's an again easy topic to understand, but you need to clear your concepts first. Okay, what transactions will be recorded in the cash book and what transactions are being seen in your bank statement. So let's begin with the chapter first. Topic name is bank reconciliation. So when do we need bank reconciliation? When your cash book balance does not match with your bank statement. Whenever you run any business, you conduct certain transactions with the bank and you maintain cash book in your financial statements. So at the end of the term, when the balance CD of cash book does not match with the balancing figure of bank statement, then you need to solve it. There are certain errors that may be done, certain errors that goes unrecorded, certain transactions that goes unrecorded. You have to record it and reconcile your bank statement balance with your cash book. So this is the summary of the entire topic. So let's begin with an example. Let's say the cash book drawn in your financial statement shows a balance CD figure of $1,000 on your credit side. For the next month, the balance brought down would be on the debit side. It means you have a positive balance in your bank account according to your cash book. If the balance BD comes on the credit side, it means it's a bank overdrawn, balance overdrawn. Okay. So when you receive your bank statement, it looks like this. You have a column of deposits. You have a column of withdrawals. And there is a balancing column. This way of presentation is called running balance method. So it's an alternate way of ledgers of T accounts. The alternate way to present your ledgers is called running balance method. Okay. So when you deposit an amount into the bank records it on the deposit column, also known as credit side of your bank statement. And when you withdraw any amount from the bank, it will be recorded in your withdrawal column. In other words, it is known as a debit column. So now, when the balance on the bank statement seen is, let's suppose, $800. So clearly, the balance in your cash book and the balance on your bank statement does not match. It means there are some errors that need to be solved to correct your cash book balance and you're going to reconcile it with your bank statement. So let's take another example. To understand bank statement further, we need to see the accounting concept that is followed by the bank. What are the accounting systems? What does bank do? When you deposit any amount into the bank increases it on the credit side, and when you withdraw any amount again from the bank, it will record it on the debit side. Why is this so? When you deposit your amount into the bank, it increases bank's liability, because the amount which is deposited by the consumer, it's a liability on the bank. Its liability increases. It's not the amount that is owned by the bank, it's the amount that is owned by the consumer. So the liability increases on the credit side, so bank recorded the deposits of the consumer on the credit side. And when you withdraw an item from the bank, any value from the bank, it is recorded on the debit side. Why? The liability decreases on the debit side. So whenever a consumer withdraws from the bank, it is recorded on the debit side. I hope it's clear to everyone. So to summarize it further, when you deposit any amount, you record it on the debit side of your cash book, and bank credits on your bank statement. And when you withdraw any amount from your cash book, it is recorded on the credit side, because asset decreases on the credit, cash decreases on the credit, and bank records it on the debit side. So I hope it's clear to all of you that accounting of our business and accounting of the bank is totally different. Okay, bank increases your deposits on the credit side and decreases your withdrawals on the debit side. So let's look at the errors that may be incurred that goes unrecorded in your cash book, and what are these errors. For cash book correction, when you look your bank statement, certain transactions might not be recorded. Might not be recorded in the cash book. So we need to record it. And the transactions could be: number one, direct debit; number two, standing orders. I am explaining these definitions as well after writing it down. Number three, it could be dishonored checks. Number four, bank giro or say credit transfer. And lastly, bank charges. So these are certain transactions that might go unrecorded in a cash book, and you can see it on your bank statement when the bank statement arrives. So you need to adjust these transactions in your cash book first. Okay guys, to understand the errors that may be done in the cash book that are not recorded in the cash book, number one is standing order. It's a regular payment of the same amount that's paid on the specific date. For example, money paid to supplier directly by the bank, amount is fixed. Standing order may you allow bank to deduct amount on your behalf and pay it to your suppliers or say any payables. So amount is fixed and it's an expense, it's an outflow, so it will be recorded on the credit side of the cash book. Another is direct debit, which means gives a company permission to take money from your bank account on a date agreed with the business. For example, gas or electricity charges, utilities. Amount could be variable. Again, it's an expense. You allow your bank to deduct certain amount on a particular date. It will be credited on your cash book. Credit transfer, bank giro. For example, someone has paid you amount directly into the bank and did not notify you before. So it will be seen on the bank statement that certain amount is being deposited by someone in the bank. So you have missed it, then you have to record it in the cash book, and it's an inflow of income. It will be recorded on the debit side of your cash book. Another are the bank charges deducted by the bank at source from your account, and you will be notified in your bank statement. Then you have to record it on the credit side of your cash book because it's an expense, it's an outflow of cash. Another is dishonored check. When someone pays you by check and you deposit the amount into the bank, and for any reason the check got returned. For example, the person has no balance in his account, then bank will notify you in the bank statement that the certain check is being returned. That particular check is called dishonored check. So when you had received it before, you had recorded on the debit side, then it is returned by the bank, it will be called dishonored check. You have to credit it on your cash book because you have not received any cash from that particular person in your bank account. So dishonored check will be recorded on the credit side of your cash book if it's seen in the bank statement. So to summarize it further, when you make an updated cash book, after looking at your bank statement, direct debit, standing order, dishonored checks, bank charges will be recorded on the credit side, and on the debit side, bank giro or any transfer that is being done by someone into the bank, you will be recording it on the cash book on the debit side of your cash book. So you will update your cash book like this. And another concept is bank reconciliation. After that, after updating your cash book, you need to draw a bank reconciliation statement in order to reconcile your cash book balance with the bank statement. So to explain the format of bank reconciliation statement, two formats are being followed. Sometimes it is written in your exam paper and you have to follow the same format, or sometimes you have to write it on your own. So I am giving you both the formats to solve it in the exam. Bank reconciliation statement. First format. You start with the balance on your cash book, balance of corrected cash book. You need to add unpresented checks, and then from the particular amount you have to deduct uncredited deposits. I am explaining these two concepts again after the format. Uncredited deposit will be deducted from the amount, and the amount which you are going to get is called balance as per bank statement. This particular amount should match with your bank statement. It means that you have reconciled your cash book balance correctly with your bank statement. If the amount is not equals to the bank statement amount, then again there are certain errors that need to be corrected. Okay, so the second format which can be followed, you start your answer with balance as per bank statement, and then you will add uncredited deposits and deduct unpresented checks from the answer. Then you will get a figure of balance as per corrected cash book. Then this particular balance should be matched with your updated cash book balance on your cash book. So these are the two formats that can be followed to make your bank reconciliation statement in exam. Number one, starting from cash book. Number two, starting from bank statement. And now we will come on the concept of unpresented checks and uncredited deposits. So what are unpresented checks? Let's take an example. You have written a check to a supplier, let's say trade payable, of $500. So instantly you will record this transaction on the credit side of your cash book because it's an outflow, and you will write a name of that particular person. I am writing trade payable over here. That particular supplier, or say trade payable, did not go to the bank and withdraw the amount. They have kept the check with them. So from your particular bank account, the amount is still there. It is not being debited from the bank statement. It is not being debited from your bank account. It means the amount is there in the bank, but it is recorded in the cash book. Your cash book balance is being lowered down by the accountant of the business. So this particular transaction will be called unpresented checks because the check is not being presented in the bank for withdrawal. I have explained it in the definition as well. Unpresented checks are written by us to a trade payable but not yet presented to the bank for payment. So the bank has not deducted money from your business bank account. The amount is still there in your bank account. Okay. So it's an easy concept. Unpresented check, you have given a check to someone and that particular person has not withdrawn the amount from your bank yet. Again, this error will not be shown in the bank statement because the amount is still there. Then you have to know this, that the amount is recorded in the cash book on the credit side. It is called unpresented check. Another is uncredited deposits. what are uncredited deposits. Example number 2. Let's say a trade receivable, or say credit customer, has given you a check. Okay, so in your cash book you will record that check on the debit side by the name of the person. I am writing trade receivable over here. Let's say $100. You have increased your cash book on the debit side because you have received the check. But again, you haven't deposited in the bank for the clearance, and the check is still there with you in your business drawer. So the bank balance will not be increased until you will present the check into the bank for withdrawal, for deposit. Okay, so that particular item, the check which is still there with you, will be called uncredited deposits because the amount is not being yet credited in the bank because the check is with you. See, I have written it in the notes, the definition of uncredited deposits, to make it more simple. Checks received by us from the customer, not yet deposited in the bank, so the bank has not increased the bank balance. Okay, so in the exam you will see these two transactions in the cash book but not in the bank statement. To summarize it further, I am making a cash book. The check given to trade payable will be recorded on the credit side. In my example, I have assumed a figure of $500. This was unpresented check because a person has not gone to the bank to withdraw that amount. And on the debit side, when you receive the check from your trade receiver, you will record it on the debit side of the cash book. In my example, I have assumed a $100 figure, and the check is still with you haven't deposited in the bank for the clearance. That particular item is called unpresented checks. So you will find these transactions are called uncredited deposits. So in the exam, in the cash book, on the debit side you will find uncredited deposits, and on the credit side you will find unpresented checks to be used in bank reconciliation statement. So again, it's a important topic as far as your exams are concerned, mostly tested in exams both in O levels and A levels, and as well as IGCSE exams. So the concept, the summary of the topic is that you have to reconcile your cash book balance with the bank statement in order to make your accounts more accurate. So you will find certain errors that are not recorded in the cash book. You have to record them in your cash book to update it, to correct it. These errors could be direct debit, standing order, dishonored checks, bank gyro, bank charges. These particular items will be shown on the bank statement, and then you have to record it in your cash book to update your cash book and bring the balance at the end with the correct figure. For bank reconciliation statements, you can see your cash book to find unpresented checks and uncredited deposits. The unpresented checks are the amount paid to trade payables in form of check. The amount has not yet been withdrawn from the bank. And uncredited deposits are the amount received by the business from your trade receivables, and the amount is still there, and the check is still there with the business. You haven't presented it into the bank for the payment. So bank reconciliation statement has two formats, number one, number two. Number one is starting from corrected cash book, number two is starting from bank statement. You have to memorize this format in the exam. Sometimes they have written it in exam, sometimes you have to make it on your own. So you need to memorize these two formats for exam. So I will solve a couple of questions to make it more easy to understand, exam style questions, in the next video. So catch up, like, subscribe, share, and press the ring bell icon for upcoming videos to make your accounting more easy. Thank you so much.